Another stock on our radar, lower in trade today on the back of an operationally good results. But remember, there was a sharp reduction in other expenses and higher other income that boosted the profits. We have IIFL Securities with us. Had seen a big rally in the run-up to the numbers. But now the stock is seeing a major sell-off, down almost 16-17 odd %. We have Mr. R. Venkataraman, who's the MD of the company, joining us now. Thanks a lot, Mr. Venkataraman, for joining in. Apart from all the other declines that we saw in your numbers, the thing that stood out was your retail broking business actually grew 9% as against a major decline that we saw in all your other verticals. Do you think this trend is likely to continue? And what do you have in terms of a forecast for FY21?
First of all, thank you so much. As you know, both in CNBC and other media, there are a lot of articles about the return of the retail participant. And I think there are 3-4 big factors which are leading to the return of the retail investor. First and foremost, I think mobility, the penetration of mobile apps. The second thing is the ease of payment gateways. I think most of the brokers have payment gateway ties with all the leading banks. And third, of course, is the falling interest rates. So my guess is that this is a trend which will continue going ahead also. And just a quick comment on our results. Although we have seen growth in our retail broking business, we had seen a quarter-on-quarter decline in the institutional broking business and investment banking. Investment banking has been a slack quarter for us. And the product distribution income, which you mentioned, that has fallen, that is primarily because fourth quarter of a year is typically a good quarter for us because of our insurance distribution. And insurance is a product which has a peak selling quarter in the fourth quarter.
All right, Mr. Venkataraman, what was quite positive was your customer acquisition. I was just looking through your presentation. It's nearly 75,000, which is very impressive. But it's not reflecting in terms of the revenues. If I look at it out there, was this customer acquisition done, the addition, in the latter part of Q1? And I say it's impressive because remember it was a lockdown quarter, and yet you managed to add nearly around 30% on your base.
See, if you look at the trend on customer acquisition, we have been showing improvement for the last 2-3 quarters. And actually, during the lockdown, the entire broking industry has coped up with the COVID-19 lockdown quite well because of, I think all leading brokers have made significant investments in the technology platform and the so-called digital non-touch customer acquisition process. Having said that, I think this, as I mentioned earlier, the trend of customer acquisition is positive, and typically it takes time for the customer to be made active. So if you acquire a customer, then it takes some time for the customer to transfer margin and become active. So the thing to look for is it's a healthy trend of improving customer acquisition, and I'm sure the benefits will start and the fruits of these efforts will start yielding in the quarters to come.
Right. In that case, if you would give us, 2 important data points for your other important businesses. One, institutional equities, that saw a 33% decline. Secondly, on your investment banking business, I see you saying that there is a strong pipeline and this business is likely to recover. We see a lot of banks and NBFCs looking to raise funds, a lot of corporate activity taking place. So is the outlook for your investment banking business good for this year? What's the outlook for institutional equities and investment banking?
I think the outlook for investment banking business for us is quite good. Historically, we have been doing well in the equity capital market space, so which is either the IPO space or the QIP space. We have recently started a debt capital markets desk, but that is a franchise which will take some time to build up. We are not present, however, in this M&A or this M&A segment. We think that in the next 12 to 18 months, there will be a lot of Indian corporates looking to raise capital. And we hope that we should get our fair share of the capital raise process. That is the reason why I'm optimistic about our investment banking business in the days to come.
Absolutely. Optimism is something that's fueling the stock markets higher as well, and we live in hope. But I wanted to ask you in terms of your commercial real estate, you have a fair bit of that. There were plans to monetize some part of this commercial real estate. If you could tell us the timeline and how much of that will be monetized, maybe in this year?
Okay. If you see, it is a legacy business for us because in most of the major cities, we had owned our own properties. and where we are the tenants. So we have roughly about 60% of the rent coming from our own group companies and 40% which is outside. Last year, first quarter, if you remember, we had sold one of our properties out. So we have been making plans to either sell or do a private REIT so that we unlock capital which is blocked in this real estate, and that will free capital to be pushed into our core businesses. We have been making such plans, but unfortunately in the last quarter we got hit because of this entire COVID lockdown exercise. So our plans to raise the REIT got somewhat derailed. And so at this point in time, it is very difficult for me to comment when exactly these efforts will yield fruition. But the agenda is very clear that we want to either sell or do a REIT so that we can unlock capital.
All right, Mr. Venkataraman, the agenda is pretty clear, so we will keep an eye out on that trend as it develops. With that, we wrap up on this edition of Chartbusters from Nigel and me. Thank you for watching. Stay tuned. Trading Hour comes up next.